Hello dear traders, you are watching a recap of the Asian session. We are going to discuss a drop in the US dollar and the future trajectory of the Aussie. We will also try to figure out how deep the yen may fall. Watch our video review and find out the main highlights of the Asian session. Market optimism caused by the talks between Russia and Ukraine warned yesterday. Now market sentiment is gloomier. The US major stock indexes halted a 4-day win streak, closing in the red. However, during the Asian session, stock futures were slowly moving up. The main three indexes also climbed higher. As widely expected, the US dollar is declining due to an inverse correlation with the equity market. It has already lost 0.5%, and the greenback maintains a bullish bias primarily because of a rate hike expectations. However, there are many other factors that influence the US currency, and they are less positive. As we said yesterday, the greenback is extending losses amid a steep drop in the bond market. Treasuries nosedived amid an inverted yield curve. Apart from that, other bearish factors arose that pushed the US currency down. Its main rivals asserted strength amid its weakness. The Canadian and Australian dollars climbed amid high oil prices, and the euro appreciated in anticipation of the ECB's monetary policy decision. The yen grew thanks to the Bank of Japan's unlimited bond buying program. Apart from that, a rapid sell-off of the US dollar in the last few days brought it closer to the overbought zone. However, some analysts still consider the current decline of the greenback to be a long squeeze. It occurs when the price falls and investors rush to sell, causing its price to drop even more. Time will show which trajectory the US dollar will choose in the US session. And currently, the US dollar index is moving within the red price corridor of 97.69 and 98.00. It has already approached the level of 97.94. The US dollar also weakened against the yen. The dollar-yen pair has been sliding down as the Bank of Japan has been buying the 10-year government bonds for the fourth day in a row. And the regulator seeks to protect the bond yield curve from a global wave of rate hikes. Moreover, it's not going to raise the key rate in the near future. One of the peculiarities of the world's third largest economy is that a weak yen is traditionally favorable for exports. However, everything has limits. Japanese economists believe that the yen is likely to stay in the range of 125 and 130. And the dollar-yen pair is trading today at 121.87. The yen mainly dived down due to high commodity prices. Analysts assume that in March the yen may lock the worst performance versus the US dollar since November 2016. The pair has already lost almost 6% this month. It seems that it has already reached its highest peaks of 125.29 and 125.86. Now the pair is expected to consolidate above the support level of 121, and yet a deeper pullback is also possible to 119.75. During the Asian session, the pair is hovering in the range of 121.31 and 122.45. The Aussie is likely to slightly drop against the greenback. Even though the local economy has revived from the coronavirus crisis, the labor market and private consumption are steady. Inflationary pressure darkens the economic prospects. At the same time, the Reserve Bank of Australia is reluctant to follow suit and raise the interest rate. The regulator plans to hike the key rate only in November, and the rate increase will total only 15 basis points. A rally in the Australian dollar is usually facilitated by rising commodity prices and a surge in China's economy, and these two factors may be quite unreliable sometimes. For instance, the Aussie tried to reach 0.7550, a high of November 2021, following a jump in oil prices. However, it weakened, dropping to the level of 0.7475. In the Asian session, the AUD-USD pair was trading with a bearish bias, remaining near the support level of 0.7473 and the resistance level of 0.7521. And that's all for now. Feel free to ask your questions down below, and our analysts will gladly answer them. Do not miss our next video review, and see you soon.